How's it going? My name is Wes Robinson. I'm an 18-year-old funded and profitable trader. I've been trading for over 2.5 years now, but only on prop firms for about a year or so. And I got my first payout within 6 months of trading on prop firms. And welcome to the very first episode of the Zero to Hero series, where I will be teaching you how to go from absolutely having zero knowledge in trading to getting your first payout in just 6 months, just like me. So let's not waste any more time and let's get into the basics of day trading. So every video that I post is going to be based in 2-week increments. Now, no, I'm not going to be posting every 2 weeks. It's most likely going to be less than that. But what I will say is that everything I teach you in these videos should be almost fully learned within 2 weeks if you are truly locked in. And what I mean by that is you are putting 1 hour to 2 hours per day into learning this craft, because this is not something that you can only put a little bit of time into and actually see results. But without further ado, let's get into the bare bones of it. What is futures trading? So what futures trading is it's very different from investing and anything else that you might have learned. Futures trading is you are betting on where price is going to go in a short window of time, and every tick of movement is worth a fixed dollar amount. The best way to describe what a tick is simply it is the smallest incremental move that an asset or a future can make. And for example, the asset that I trade, the NASDAQ, moves in points, and 1 point is equal to 4 ticks. Now, I don't just trade the NASDAQ, I trade what is called the micro NASDAQ. So 1 point is worth less on micro NASDAQ than it is on NASDAQ, and I'll get to that in a moment. So as you can see here right now, I have basically a chart that shows 100 points, or as you can see in the top right, 400 ticks. And in one NQ contract, if you caught a move that was 100 points, you would make $2,000. But all I had to do is change this, and now one micro contract in a 100 point move would only be worth $200. So yes, a huge difference between micro NASDAQ or MNQ and regular NASDAQ, which is just NQ. One NASDAQ mini contract, which is just NASDAQ, is 10 times larger than a micro contract. So one NQ contract is equal to 10 micro contracts, which explains why a 100 point move on MNQ is 10 times smaller than a 100 point move on NQ. The next thing we're going to be learning is what is a long and a short position. So a long position is when you are predicting that price is going to move higher after you take your entry. And a short position is when you're predicting that price is going to go down after you take your entry. So how these positions are split up, this is called a short position and this is called a long position. They're split up into 3 sections. Your entry, which is this middle ground between the red and the green, your stop loss or your drawdown, which is the area of red, and then your area of profit or take profit. So at the very end would be your take profits. At the very bottoms, or the ends of the red area, will be your stop losses, and where this line is actually where your entry is. I'm in replay right now, so this is not a live chart, but I'm just here to give you an example of what a short trade would look like. Let's say that I see that price took out these highs and that we are now continuing in a downtrend. So I'm going to end up looking for shorts. I see, okay, we just formed this 2-minute fair value gap. So now I'm going to wait. I want to wait for a retracement and then maybe look to take a short if I get a good reaction, because now we are in a downtrend. And when we're in a downtrend, you typically want to look for shorts. And now obviously in later videos, I'm going to explain when you do and don't want to look for shorts and longs, even if it's with the trend. But let's say that I wait, I put my stop loss here, and I target a 1-to-2 risk to reward ratio. I sell 10 contracts. And as you can see, I place my stop loss all the way up here. My entry is at that middle ground between the green and red zones. And then my take profit is all the way down here at $500. And now I take my entry, I get tagged in, and we hit full TP. So just like that, I made $500, but I only risked $250. Why? Because my risk to reward ratio right here was 2.04, so just over 1-to-2 risk to reward ratio. A 1-to-2 risk to reward means that you are targeting 2 times more than what you are risking on a trade. And a general rule of thumb is that you never want to have less than a 1-to-1 risk to reward ratio. And for the most part, depending on your strategy, you really don't want to have much more than maybe a 1-to-3 risk to reward ratio as well. So that is an example of a short position, and it would be the same situation in a long position. But next up on our target list is going to be the basics of TradingView. TradingView is just the platform that every single trader uses. Every big name, TJR, Dodgy, PB, they will be using TradingView as their main platform to take these trades, which is what this whole thing is. So let me go over the basics of TradingView. Up here in the top left where my cursor is, you have your time frames, and you can switch your time frames. So I'm on the 2-minute time frame right now, but I can switch to the 30-minute, which pushes me all the way out here, where each candle is a 30-minute candle. I could drop down to the 15-minute. So each one of these candles is a 15-minute. They open at 9 o'clock and then it closes at 9:15. And I can go all the way down to the 1 minute, with every single candle being being the same length as 1 minute. So let me give you a quick quiz. This candle right here, this one that my cursor is on, I'm on the 5-minute time frame. So how long did it take for this candle to open and then close? Correct, 5 minutes. Now, if I go to the 30-minute and a candle opens and closes, how long would it take from the time it opened to the time it closed? Exactly, 30 minutes. Now, let me go to this side cursor that I'm sure you've looked at a few times. I see this little guy smiling, see this T. What does all this mean? All this stuff is simply used to mark out positions, mark highs and lows, or take measurements. And I'll be honest with you, most of this sidebar is really not going to be used. For the most part, I'm really only clicking on this one, which is called the forecasting panel, which you mark out your short positions, your long positions, your price range. And then there's this one, which is rectangle tools, which I will teach later, is where you mark out what's called fair value gaps, which is just gaps in price like this. But again, that will come in a later video. And then, you can also use this brush if you want to mark out certain areas of price, or if you want to mark out like a very, specific range of price, stuff like that. But, things like this, the, a measuring tool, like I don't really use this. There's emojis. I'm obviously never going to be using that. Now, as you can see here, this blue and red button, these are your buy and sell orders. So if I click sell right here, you will get popped up with this screen. If I click buy, you will get popped up with this screen. And they are practically the exact same thing. The only difference is that one is when you were looking for buys and the other one is when you're looking for sells, or longs and shorts. Another word to say buy and sell is long and short if you want to sound smart. But for example, let's say we're in a buy. We have a market order, and a market order is basically buying it exactly where price is. So right here, price is at 29,869. We'll just make it easy like that. So if you are buying a market order, you are buying it exactly at 29,860 whatever. A limit order, if it's a buy limit order, you are placing it above where current price is because you want to get a better entry on a trade or something like that. So if I'm placing a limit order in a buy scenario, I'm placing it above where price is. If I'm placing a buy order in a sell scenario, I'm placing it below where current price is. Now you have your stop, which is used in the opposite situation. So let's say I am in a short position, or I am looking for shorts. As price continues down, you can manage your position by trailing your stop loss. So that's when you're in shorts. So a buy stop is used when you're in shorts, and a sell stop is used when you're in longs because you are trailing that position and protecting your gains. And now the last one is a stop limit, which I honestly really never use unless you're using other limit orders. But I'll be honest with you, you're probably not going to use it that much. So that generally covers all of that. But let me help you out and let me show you something that took me a year to figure out you can do. You can simply, let's say I want to look for longs from here. All you have to do is place where you want your stop loss to be and where you want your take profit to be. And then with 2 fingers, if you have a mouse pad, with 2 fingers, if you have a mouse pad, you can just double click it and click create limit order. And like I said, when you're creating a limit order, for example, in a buy situation, you're going to be putting it above where current price is. As I said, price is at 29,870, and I'm placing this buy order at 29,874. So then I can place my stop orders, and then I can target my take profit and my stop loss all in one go instead of manually doing it. Enough of that. Let's get into the last trading view basic that I feel you guys should learn, and that up here is the indicators. So indicators are what basically every single trader uses to make their trading easier for them, whether it's marking levels, finding certain ranges of price, or some other indicator that makes trading easier for them. I only use two trading indicators. I use ICT kill zones, which marks out specific areas where price tends to be more volatile and there's more volume, and it creates good draws on liquidity. And what a draw on liquidity is just an area where price wants to typically go, which, as you can see, each of these little colored areas is a session, and session highs and lows tend to be very good draws on liquidity. And the other indicator that I use is an SMT indicator, which I'll explain in the next episode because you guys are just learning the basics right now. I have thrown a lot at you guys so far in this short video. I threw the absolute basics of what futures trading is, what a long and a short position is, the trading view basics, as well as teaching you guys about limit orders. Now, I think this part of the video is going to be the most important because I need to give you guys a gut check. I need to give you guys a reality check. Trading is extremely difficult, and that everything I'm showing you is over 2.5 years of gaining market knowledge. And even with trading over 2.5 years and being a profitable and being a funded trader, I am still learning new things about trading every single day. And that is what trading has to be. Just like any other craft, you have to be in a constant state of wanting to learn because the markets are an ever-changing thing. So you also have to be ever-changing. But as I said, trading is extremely difficult, and that you have to be willing to put, especially in those beginning weeks and months, so much time and so much effort into this, and that this is not something that you can only put a little bit of time and effort into and expect to get a large result out. You might make, a little bit of money here and there, but if you really want to be making $5, $10, $20, $30,000 a month, you have to put hours and hours of work into this. I'm not trying to scare you guys away because in my opinion, trading is one of the greatest decisions that I've ever decided to pick up, and I have zero regrets in it. And I want you guys to have zero regrets in it as well, but at the same time, I want you to be cautious and know that this is not a get-rich-quick scheme. But enough of that, enough of scaring you guys. If you are still here, we are moving on to the final aspect of the absolute basics, part 1 of this series, candlesticks. Candlesticks have 6 key components: the upper shadow, the highest price, the open price, the close price, and the lower shadow. I will start with a bullish candle and then I will move to the bearish candle. On a bullish candle, the open will always be lower than the close because of a bullish candle, when it opens, it'll close higher because it's pushing higher. Now, every candle is moved and influenced by buyers and sellers. So price open, let's say, for example, price opened here. And you don't know if it's a bearish or bullish candle until the second it closes. So let's say, for example, this is a bullish candle. Price pushed down all the way to here and put in the lower shadow. Okay, the lower shadow is just the lowest point that a candlestick reaches. So price and sellers pushed all the way down to here, but buyers stepped in and pushed the candle all the way up to here and created the upper shadow, which basically is just the end of the highest end that the price of the candle reached. Then sellers stepped back in ever so slightly and pushed the candle to close down here. So let's say that this was a 1-minute candle. Maybe in the first 10 seconds, it opened, it went lower, and it was a bearish candle for 10 seconds. And then buyers came back in, pushed it all the way up to here, but the buyers that were all the way, buying at that point of price weren't as strong as the sellers that were selling at this point of price. So then they pushed it slightly back down. And like I said, if it's a minute candle, maybe it was down here at second 10, it was up here at second 55, and then it closed here at 1 minute. Now the same exact thing for a bearish candle, except for the fact that the open will be higher than the close. So same situation, like I said. So same exact situation, except everything is flipped. There's still the upper shadow, the lower price, close price, open price, and highest price. But exactly like I said, it is a flip scenario. So instead of buyers stepping in or a large amount of buyers stepping in, there's a large amount of sellers stepping in, forcing this candle to be bearish. So for the same situation, let's say that it is a 1 minute candle. Maybe for the first 10 seconds, buyers pushed up and forced this wick to be put in. And then sellers aggressively stepped in and, through 45 seconds, pushed price all the way down to create this lower shadow. And then buyers stepped back in last second to push price to finally close right here. But like I said, it could be an entirely different example. It could be that buyers or sellers initially stepped in, dumped it all the way down to here. Then buyers stepped back in, pushed it all the way up to here to create this upper shadow, and then sellers stepped back in once more to push price finally all the way down here. So there are countless different ways that a candle can be formed, but at the end of the day, they all remain with the same 6 key components. Another thing you have to understand is that different shaped candles have different meanings. Just for this scenario, I want you to focus on this top row of the candlestick patterns. If you are taking notes on this video, you really do not have to write these down. I have never said these terms in my 2.5 years of trading. You just have to understand when a candle closes, what all these mean. So on a doji, this means that buyers and sellers are literally exactly equal with each other. And it's often an indicator that price is going to begin reversing or pushing higher. So let's say in a bullish example, price is pushing higher, higher, and higher, and then we get a doji at the top of our price. That means that buyers and sellers are the exact same, and that price, there's a chance that price is going to start continuing back down. On a dragonfly doji, this shows that sellers stepped in very aggressively, but right at the last moment, buyers stepped back in and then bought back all the way up so that the close and the open were exactly the same. Same situation for a gravestone doji. Buyers stepped in, pushed the candle very high, but then sellers stepped back in more aggressively, and that the open and the close are the exact same. A hammer, very similar to a dragonfly doji, except buyers stepped in, and now the close is a little bit higher than the open. Same situation for an inverted hammer. Buyers were, they stepped in very aggressively, and then sellers took it a little bit down, but it is still a bullish candle. Hanging man, similar to a hammer, except for the fact that it is now a bearish scenario, and a bullish spinning top just shows that there is a good balance of buyers and sellers in the market, as well as a bearish spinning top. Very similar to a doji, except for the fact that the opens and closes are slightly different. But like I said, if you're taking notes on these, you really do not have to know their names, just know what they mean. If you've made it this far, we have gone through what futures trading is, a long and short position, the basics of TradingView. I gave you guys a gut check on the reality of day trading. And lastly, we went over candlesticks, which I highly recommend watching other videos on if you didn't understand anything that I said in this video today. And at the top, you see this 2 weeks, because I want to remind you that everything in this video should take you around 2 weeks to fully understand if you want to be able to get your first payout in less than 6 months. But I don't want you to feel that taking a payout in 6 months is a reasonable timeline. I advanced extremely quickly because I was extremely focused on trading. But people have jobs, they have sports, school. There are a million other things going on in your life, and I don't want you to compare your journey to somebody else's. But if you have stayed this far in the video, I appreciate you so much. Make sure to drop a like, comment your thoughts on this video, subscribe to the YouTube, follow my Instagram as well as my TikTok, and join the free Discord where I give my bias every single morning, show exactly the trades that I took and why I took them. And if you're a beginner trader, I think it's an extremely helpful and great thing to do is join the Discord, because I answer every single question that anyone has ever had with as much detail as I can. But with that, stay blessed, stay dangerous, stay trading. Have a blessed day.